And we are live. Hey, everybody. Welcome to Talk Crypto, the show that tries to bring a bit of humor, a bit of fun, a bit of casual, bring your cup of tea, whatever you want to bring. Come to the show, hang out with us for an hour or so. We've got an exciting night tonight. We're actually going to mix it up. We're still sort of finding our way with the format. So we have headliners, we have Crap Crypto, and as you saw last night, we had the clash, which was very exciting. Great to hear one side of the argument. Love to have somebody on to debate the other side, and maybe we can get both parties head to head. But tonight, I'm very privileged to have Jeremy Britton join me from Boston Coin, all the way from Australia. Jeremy's kindly got out of bed. It's 5:30 in Australia, poor sod. And I thought rather than we're getting into all those headlines, all the rest of it, let's find out a bit about Jeremy. He's going to kind of join us hopefully on a relatively regular basis, but obviously you guys need to get to know him, I need to get to know him, so let's just dive into find out a bit more about Jeremy. So excited to get into it. So let's go, guys. Jeremy, thank you so much for joining us. Really appreciate it.
Thank you for having me on the show.
No, definitely. So I thought, like I said, just quickly before we went live, I thought it'd be really nice just it's the first, we've obviously chatted briefly on socials, and just get to understanding of, what you're about and, how you got into crypto. So let's dive into your origin story, if that's all right.
My origin story. The important thing to know is that my parents are both school teachers, so that'll feature heavily later on in the story. So when I was, my parents practiced on me, so I learned how to spell and read and all that sort of stuff before I got to school. And when I was in school, I always thought I was smart because I was a little bit smarter than the kids who were in my class because I'd been educated at home a little bit beforehand. And going through school, I had no idea what I wanted to be when I grew up, but I pretty well thought I could do anything because, I was smart. And after school, I went on to university, and you get to university and you discover that everybody is really, really smart. And a lot of kids are a lot smarter than you. And you also discover that when you're at university, you're starving to death. Like I was cleaning toilets at 2 o'clock in the morning. I was eating noodles. I was brewing my own beer in a bucket, had no money. And I thought, this is awful. And at the same time, I'd met this guy, and we bonded over comics and cartoons and things like that. This guy was probably in his 50s. I was, 19. And I just thought he was a really cool guy. And then later on, I found out he was rich. And I went, oh, okay, well, what do you do? I've just noticed that, like, not only have you got a cool car, but your name is on the outside of this 3-story building. Like, you own the office. And he said, we look after people's money and teach them how to invest and put it in places. And I went, oh, that sounds really cool. How do you get into that? And he's like, well, show up Monday morning and I'll tell you all about it. So I pulled out of university. Obviously, my parents are very upset. And I went to work as a financial planner when I was 19 years old. And I thought, this is great. I'm going to start my own business because I'm clever. I can do anything. But I had all the book education. I had no street smarts. And of course, my business failed in the first couple of months. So, after 6 months, I was flat broke again. I moved into my parents' garage and they said, go and enroll in university and, finish your degree and that sort of stuff. And I went, no. It was good to have even a little bit of money and a little bit of freedom and, meeting these people. I was 19, I had no money, but I had learned how to invest, and all you need to do is know a little bit more than the person you're sitting in front of. So,
and I guess also, Jeremy, just to jump in there, you had that first taste of entrepreneurship and business, because obviously your parents coming from education, they would, that's a completely different environment to the business environment.
Absolutely. And that's something I really needed to shift my mindset a lot in order to do that. But so my first business failed because I knew nothing about business, but I learned. And I launched another business 6 months later. That business went for maybe 2.5 years, and then failed. And then my parents again said, hey, go back to university, get a real job. And I went, hey, I'm getting better. I lasted a lot longer than I did the first time. So this is my 13th startup, just a shortcut. But over the next few years, I launched 6 financial planning businesses and a couple of retail businesses. And I just really loved the idea of getting in. Like, the stock market was a whole new world for me. I'd never learned about it at school or at home. My parents never invested in stocks. They never bought an investment property or anything like that. And most people didn't understand it. So, when they talk about the Nikkei Dow and the Dow Jones and the negative bond yield inversion and that sort of stuff on the news, people just don't understand it. So when I was taught it at a very basic level, because I was a young kid, I could go and teach other people, and seeing their eyes light up and people going, oh my God, I understand this for the first time. And people who are like, 30, 40 years old, and they were in the real world, but they'd never bought a stock or a share. They'd never bought an investment property because they didn't understand. And when I could explain it to them using my, parents' school teacher training, it literally changed their lives. So I absolutely loved, being in the markets, being in investing. And then I think it was 2012 when one of my mates, who was also a financial planner, said, hey, there's this Bitcoin thing. You should get into this Bitcoin thing. You'd love it. Investments.
How old were you sort of in 2012, roughly?
How old was I?
Yeah.
Oh, shit. Hang on, do the math. 30.
So 2012, Bitcoin first came on your radar.
Yes, yeah,
that's interesting because that was a similar time to
$10 at the time, $100 something.
Yeah,
very.
I was going to say that's a similar time to when I first it came onto my radar, and of course I didn't do anything about it.
Mine too. I was mining Bitcoins on my Raspberry Pi.
Wow.
Well, it didn't work. But it was back when it started on my radar as well. I think that was about that time people got in it, about 2012, didn't they?
I think I only used the Raspberry Pi for downloading things I didn't want on my actual computer in case I put a virus. The LimeWire days where I'd spend all night trying to download an MP3.
So your mate sort of did you discover it or did your mate discover it? What was the?
My mate discovered it and told me about it, and I looked into it and went, I don't understand it. Like, I don't understand it. I'd been on the internet for, a long time by then. I got on the internet back in 95, 96, very early days, before there was the World Wide Web. But this magic internet money that didn't really exist, I didn't understand it. I had a PayPal account. Why do I need Bitcoin? And I basically ignored it until a couple of years later.
Sorry, Jeremy,
because I outsourced a lot of stuff. What's that?
Sorry, Jeremy, I was just going to jump in just quickly. Do you think you ignored it because you were coming from a traditional financial services background?
No, because he did tell me it was an investment thing. I just didn't actually get the technology.
Yeah.
Like, SHA 256 is just like a foreign language. It's like, Python and HTML. Like, I have a website, but I don't know how to program the website. It's not my department. I don't understand it. And I've got too much else going on that I don't want to learn everything,
Yeah,
so,
definitely.
But it was another couple of years later, so maybe 2015, when, I was paying, we got people working for us in Africa and India and Indonesia and Brazil and Thailand and God knows where, Fiji. And some of these people have bank accounts. It's cost me $20 or $30 to transfer to their bank accounts. Some of them didn't have bank accounts because the unbanked people in the third world. And, it's Western Union. It's like $70, $80 to transfer. And they've got to go down with their driver's license and get cash. And I was actually complaining to this other friend of mine how much it was costing me in bank transfers. And he said, I just use Bitcoin. And I went, I've heard of this Bitcoin thing, but I didn't understand it. And he said, well, it's basically like gold that you email to someone. And I went, okay, that kind of sounds sensible, but the gold price moves up and down. He said, yeah, but if you send it to them at 9 o'clock and they cash it out at 10 o'clock, it doesn't matter so much. And I went, okay, cool. What's the transfer fees? And he said, they're like 50 cents. I'm like, beauty, I'm in, I'm sold. Yeah. So, I bought maybe $1,000 worth of Bitcoin at the time and then used it to pay all of our different people. And then every month I'd go and buy like $1,000 worth of Bitcoin and send it off to our different people and paying 50 cents in transfers rather than $70 or $80. And
Jeremy, that's really interesting, isn't it?
What's that?
Sorry, I was just jumping in again. Sorry. It's really interesting how your first experience of Bitcoin was more of a used case, whereas I think a lot of other people get into Bitcoin purely from, oh, price going up, I need to, it sounds like it's a way to make money. That's I'd imagine most people's sort of entry point is more, on the latter rather than actually, this is going to help me with my business. So that's really interesting, particularly, way back then.
Yeah, well, I didn't know, and my friend hadn't pointed out that there was a scarcity thing. Like, there's only ever 21 million Bitcoin. I didn't know that. I just thought, okay, it's like gold, and I can email it to people, because I understood in the olden days. I'm old enough to have actually sent a physical letter, right? And it takes 3 days to get there. And I'm old enough to have actually handwritten a fax to someone and faxed it to them, and it takes like 5 minutes to get there. And then we got email, which is instant. I can send you a cat picture faster than anything. So my friend's just like, yeah, send it out. But there was no decent exchanges. There was no centralized exchanges. There was these dodgy, Bitcoin communities that you'd go on, and it was really shady. It was like Craigslist. And every time I put my credit card details into it, I was like it's a bit scary. And so one day I just decided I'm going to buy like 6 months worth of Bitcoin, so I don't have to keep entering my credit card details into this really sketchy website. So I bought 6 months worth of Bitcoin, and over the next few months, paid this person, paid this person, paid this person, paid this person. And after like 5 months, I went to check the balance because I thought I've got to be getting low. I've got to go and buy some more Bitcoin. And because in my head, I'd exhausted the supply of Bitcoin that I had. But when I went to check the balance was even higher than when I first started. And I was like,
well, the dollar balance.
Like, what's that?
The dollar balance was higher.
The dollar balance. And I thought there's something wrong with this picture. So I said to my friend, like, maybe someone's accidentally sent me all their Bitcoin. What's going on? And he's like, no, Bitcoin's a store of value. And when the world's going to crap, it's a hedge against inflation and against uncertainty, like gold. I told you it was gold that you can email to people. And I went, hang on, I've got to look at this a little bit more, because I was buying Bitcoins for a few $100s. All of a sudden, there's several $1,000s. And I'm like, that just doesn't, I don't understand. But as you say, like, other people came to it because they thought it goes up, they make money. But when I got into it, it had been flat for a really long time. So I was just using it transactionally. And then it was a bonus that it actually went up and made money. It was a bonus that it was a hedge against when the stock market's doing badly and that sort of stuff. So
I think that's fantastic. That actually, I just think that's amazing. It was an actual business problem that you faced. How were your customers? Were they aware of Bitcoin? Were they just happy to did it take much persuading?
The normal people, like my friend was sort of, very much on the front foot with technology and that sort of stuff. Like these guys who actually understand the difference between a Python and an HTML, which I do not. I just understand stock markets. That's my thing. So I think the general public was really, really unaware. And then when Bitcoin went from $1,000, up to almost $20,000, when was that? Like 2016, 2017? I don't know when it was. Bitcoin started to enter the public conversation. It was all of a sudden it was in the newspapers. It was on the night news. People were talking about it. And there was even a guy in America who had like little gold Chuck E. Cheese tokens. And he was selling them to people saying they were Bitcoin, because no one actually knew what a Bitcoin was or what it looked like. Obviously, he made a bit of money and then he got arrested. But I think it might have been 2016 is when Bitcoin started to enter the public narrative, and then Ethereum had come out. And once Ethereum had come out, people could actually start to make all these other coins on top of it. And that's when I saw a lot of these little projects, and like this one's putting real estate on the blockchain, and this one's sharing different assets, and this one's solving this problem, and this one's sharing solar power, and like the eBay of solar panels. And I look, this is like a little stock market. I understand the stock market, and all these different projects are like, the little cheap ones that didn't make it to the stock market. But let's face it, Facebook didn't make it to the stock market until it had been running for about 5 years, and same with Amazon, and same with Coinbase. They didn't make it to the stock market until they've been running for a while. So I thought these are like little cheap startups, high risk, high reward. And because I understood the stock market, I could actually start trading these ones and doing the same research I do on stocks. Like, is it a decent project? Does it have experienced founders? Blah, blah, blah. I could get into them and I could actually invest in these things. The fun part is that, in the stock market, if a stock goes up 30, 40% in a day, they cease trading. They just stop and say, okay, everyone go home, calm down, come back again tomorrow, But in crypto, they're just trading 24/7. There's no police, there's no regulators. So some of these investments I got into, I'd make 30, 40% in a day. I could make 200% in a week. And I go, oh my God, that's the sort of returns that you don't even make in a year in the stock market.
Yeah.
So I got very excited about all these little projects and started investing in these things and telling a few of my friends about it and saying, hey, look, have you heard of this crypto thing? I'm investing in it. It's like a little tiny stock market, high risk, high reward, but I've made 512% this week. And like, oh, can you teach me how to do that? And I'm like, sure, Here you go. 1, 2, 3, 4. There's like 4 little steps. Do this. And by the time I'd told the 4th or 5th person the same thing, I thought, like, I'm wasting my time. I'm repeating myself. So I made a little website and just put the tips on there. And anytime anybody asked me, hey, what are you up to? I'd say, go to this website, read through this thing. And then there was like, maybe 20 or 30 people who were actually following the procedures that I was doing and making great money in crypto. And then one of my mates, who's a financial planner, I've known him for, 20, 30 years. He said, this is really fun. I've made 300% on Ripple in a month, and I've done this and I've done that. He said, but I don't have time. I'm still working in my financial planning business. Can you do the trades for me? And I just went, oh, Steve, I'm happy to trade for myself. I'm happy to trade for my partner because she knows where I live. And if I lose her money, she can just punch me in the side of the head. But I wouldn't trade for my mum, and I wouldn't trade for my best friends because it's very volatile. And if this thing goes down, then you're never going to talk to me again. And he's like, oh, no, that wouldn't happen. We've known each other for many, many years, blah, blah, blah. And I was like, I was literally too afraid if I lose money for my mate that, I'm going to ruin the friendship. And he was phoning me because he knew how much money he could make in crypto versus the stock market, but he just didn't have time. He'd phone me every week. He'd say, oh, look, can I give you some money? Can I give you some money? I'm like, no. About the 5th time he phoned me, I said, look, the only way I would actually take your money is if we could set up like a legal structure, like the first mutual funds, like the Fidelity funds and the BlackRock funds and Vanguard funds, these sort of things. And, you put in 10 grand, I put in 10 grand, someone else puts in some money, and then we trade it. And it's all open and honest and policed, so there's no question about, did I take your $5 or whatever? And he said, like, you do what you've got to do. I'm happy. I trust you. And, mutual funds have been around for 50 years. There's tens of thousands, probably hundreds of thousands of them. But, like in America, you've got, say, the S&P 500 fund, which just does American shares. And, you've got the Chinese one and you've got the Australian one and different ones, which are all very, very localized. And there wasn't actually a worldwide one. And crypto, as you know, is worldwide. Yeah. So walking into it, I had no clue. And we had to go from pillar to post, basically, with different tax specialists and accountants and international structure specialists and all these different lawyers. It was really, really complicated. And eventually we managed to create a structure that had never existed before, this worldwide investment structure. And the guy who was setting it up,
no one's done this before. So this was like literally, so the lawyers, and all the rest of it, they were trying to figure it out, and obviously crypto was all new to them. So how did you? How did you overcome? What sort of challenges did you face when you were sort of trying to figure out the structures and?
Well,
where to base it? Did you base it in Australia, or did you have to base it internationally?
We did eventually. There was a few guys who said, "Oh, we want you to set up in the Cayman Islands or the British Virgin Islands or that sort of stuff, where the laws are a bit looser." And I said, no, we're not doing that, because as soon as you hear those words, people start to think, oh, it's a tax dodge, it's a scam, it's a whatever. You know, there's probably legitimate businesses set up in those places, but there's enough dodgy ones that just by association and reputation, it was like, no, we're not going to do that. We wanted to set up in the US because eventually we wanted to be able to market to the US and to other countries. We looked at Singapore, we looked at London and a few other places, and the US was just a little bit easier. So we set up this structure, and it was literally the lawyer who said to us, you know, why are you doing this crazy international sort of, you know, alternative asset investment structure? And I said, because we're going to invest in crypto. And he said, I've heard of crypto. A lot of my friends are making money in crypto. I don't understand crypto. Clearly you do. Let me put in $10,000. I'm like, wow, lawyers don't do that. And then the accountant, the same thing. The accountant said, why are you doing this? I said, because we want to invest in crypto. And the accountant goes, oh, like I'll whack in 10,000. Like, I don't know if you guys have an accountant, but I've never had an accountant ever who's ever said they wanted to invest in anything. Like they're cynical by breed. And so then we had our first two investors. I went back and I phoned Steve and I said, okay, Steve, we've finally got this structure set up after like 6 weeks of going around to different people. And he said, mate, I've been waiting for your phone call. Like the last time we had a phone call, I put $10,000 in your bank account. I've been waiting for you to notice. I've been waiting for you to ring me up. He just trusted me implicitly. So our first investors were literally, you know, financial planners, accountants, lawyers, these sort of guys. And it was still obviously very volatile. We're having some great weeks where you'd make, you know, 600% and a bad week where you'd lose 50%. So I said, we're just going to run this quietly, not going to tell anybody. We'll run it for a year or two. If it goes well, we'll tell the public. If it does not go well, then we'll just file it under, you know, also ran and never tell anybody about it. But it was just basic diversification. You know, as I said before, when the stock market goes down, gold goes up, and when property goes down, something else goes up. And because we had the diversification like a dartboard, when Bitcoin dropped down, we had other things go up. So for the first 2 years, we actually beat Bitcoin. And I was like, wow, we didn't want to beat Bitcoin. We just wanted to have less volatility, but we actually did very well. So then we launched it to the public, which was January 2018. And it went really well for about 3 or 4 months. But 2018 was when all the scam coins and the crap coins and everything else came out. And, you know, then Google and Facebook and Twitter and everybody banned advertising for crypto because there was just so many scams around. And, you know, we couldn't market, we couldn't advertise. So, but we've still managed to keep going for the last, you know, 6-7 years without doing any advertising. So, and still beating Bitcoin every year.
Amazing. Is it? You've heard of Kathy Wood, right? She's got some sort of investment vehicle, hasn't she? She's ARK
Invest.
That's it, ARK Invest. Is it that sort of thing?
Well, ARK Invest is primarily technology stocks.
Yeah.
So, yeah, she'll invest in the cutting edge of technology, not in crypto. Kathy has actually put forward to the SEC to launch a Bitcoin exchange-traded fund. So she's one of the applications, as well as BlackRock and Fidelity and Wisdom Tree and a few others. So she hasn't really crypto associated. I think she invested in MicroStrategy and she invested in Coinbase, but primarily tech stocks, not crypto, is what ARK Invest about.
And that's why these guys are one of the ETF, so they can basically invest in it. So what's the difference with their structure that stops them investing in, you know, directly into Bitcoin as opposed to you guys? What's the difference?
Well, ours is a diversified mutual fund. So I guess a lot of people would be familiar with them. You know, you have your retirement accounts. In Australia, you have superannuation. In America, it's a 401k, Roth IRA, that sort of stuff. So, you know, your boss is putting money into this account for you so you can have it when you're old and doddery. But you're not sitting there trading your own shares. You're not sitting there going, oh, I think I'll buy something. There's a fund manager who's actually doing that for you. So that's what we're doing. We're actually doing the work for the people into different things. So if you go onto the website, you can click on portfolio and it'll show you exactly what we're invested in right now. Like it's 54% Bitcoin, 15% Ethereum, something, like 30, 40 different things that we're invested in. And every time we buy or sell something, we update that live. So people can see exactly what we're invested in all the time. Whereas with the Bitcoin ETFs, obviously, it's what we call a mono fund. It's just invested into one asset. So you can get a gold ETF and you can buy just gold. And obviously, gold does whatever gold does. It sits flat for a long time. When a financial crisis comes along, gold jumps up. But it's not diversified. So you have these long periods where it does nothing. You have periods where it goes down, and you've got nothing to do but to wait. Whereas obviously, like your retirement funds, is diversified into 20, 30 different things rather than just one thing.
And is there an advantage in the fact that you guys are actually buying the actual physical Bitcoin, whereas as I understand it, the ETFs, you're not actually buying the physical, or they're not going to be buying the physical Bitcoin. They're not going to, you know, that they're buying something that represents it. Is that correct?
The ones that are around at the moment, like there's the Bitcoin Futures Fund, the Grayscale Bitcoin Trust, is basically, it's buying bits of paper saying we agree to buy or sell Bitcoin on this date in the future. So it's what's called a futures contract. So the Grayscale Bitcoin Trust doesn't own any Bitcoin. It's just got a contract saying it can if it wants to. And this is where these new ones come in. The ETFs that are proposed will actually buy physical Bitcoin and hold on to physical Bitcoin. And that's why it's contentious, because the SEC is saying, oh, you know, that's different from the Grayscale thing that they approved. And it's not an approved product. And you know, everybody's been fighting against Gary Gensler.
Yeah, we've seen a lot of that, haven't we?
Chairman of the SEC. And he's contradicted himself many times.
Yes.
You know, he used to say that Bitcoin's a commodity, not a security. Then he's saying it's a security. Then he's saying this. And the judge, judge last week, who actually said, you know, there's no difference to the investors between the one that you approved, which is the futures contract, and the one that you didn't approve, which is the one that's holding actual Bitcoin. So you've either got to approve both or you've got to approve neither.
Yeah. What's your thoughts on the reasons he's put up these little barriers?
I don't really want to say what I think about Gary Gensler apart from.
Go on, do it.
he's contradicted himself a lot. I think he's, personally, this is just my opinion. Allegedly, he's a little bit dirty because he actually applied to work for Binance back in 2017, and they knocked him back. So, back then he was lecturing, he was saying great things about crypto and Bitcoin's a commodity, ETH is a security, blah, 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 blah. And they're all great investments apart from the dodgy scams, of which there were a lot back then. And then he's changed his tune after he got rejected. He's just been on the rampage and just hating on crypto all the time. Whereas even some of the conservative politicians, like he's got Republicans and Democrats who both have called for him to be fired, saying he's irresponsible, he's giving crypto a bad name, and causing companies to leave the US and go and domicile themselves in other countries because he's just not friendly to crypto. And it's basically the Gary Gensler show. It's not the opinion of Congress. It's not the opinion of the SEC.
And it's that woman, isn't it? Is it Elizabeth Warren? I think. I think they're sort of like a sort of anti. Maybe they're both in each other's pockets. I don't know.
I don't know too much about Elizabeth, but there's a few of the conservative politicians who simply don't understand it. And like I didn't understand crypto back in the day, and I said no to it. And that was, to my downfall because I didn't get in when it was a few dollars. But Gary actually does understand it. He used to lecture on this stuff. He's really researched it. A few politicians who don't like it are the ones who don't understand it. Once they actually get into it, I'm sure they'll see there is a use case for Bitcoin as a store of value and also as funds transfer. And there's use cases for other different ones as well.
What do you think, Will? Why do you think they're putting sort of barriers? Because this is a slight segue, isn't it? We're just talking about Gary. I don't know. My feeling is there's some sort of manipulation. There's some sort of reason behind it. Are they waiting for the CBDCs to come out and get that in place? I don't know. I'm getting a conspiracy here, but
I think it's probably a multifaceted issue where there's a huge amount of sort of probably different reasons and different motivations behind people's opinions. I think there's obviously very much a lack of understanding across the board generally. But also, yeah, I mean, there's undoubtedly financial motivations, investment motivations. I like to think the better of the politicians, but
I've given up a long time ago.
But
it's nice to see both sides, Will. We got the conspiracy theorist Ben sitting over here saying that all the politicians are corrupt, and you're saying, maybe they're just dumb.
Well, no, I say I'd like to think that you can trust your politicians, but obviously it's been proven time and time again that you can't. So who knows? I think people's motivation.
Not all politicians. It's just the 99% of bad ones that give the other 1% a bad name. That's what it is.
I'm sure that's the case.
But I think there's people who don't understand things, and we're naturally fearful of things we don't understand. So, as I said, like when I first started getting into stocks and shares, I go, oh my God, this is amazing. I'd never learned this from my parents, never learned this from my school teachers. And it was a whole new world. It was basically, like, God, the Wizard of Oz sort of thing. Like, I was living in this black and white little world where you just work and you get paid and that's it. And then I go to the land of Oz where you could actually put your money into something and the money actually pays you while you're sleeping, and go, oh my God, this is amazing. This is incredible. But even as a financial planner, like I worked in the bank for a number of years, and people would come into the bank, they'd be depositing the paycheck, and the teller would say, hey, you've got like $20,000 or $50,000 sitting in another account here, just earning 2% interest. Why don't you go and talk to this guy in the back office and see if we can get you a better rate? And they'd agree to it because they think they're getting a better term deposit. Like, oh, maybe instead of getting 3%, I can get 4.5%. And then they sit down with me and I start talking to them about stocks and shares, and they go, oh my God, I'd never invest in stocks and shares. And I say, why not? And they say, oh, because my grandfather lost all his money in stocks and shares. And I say, okay, when was that? 1934. And I'm like, okay, like there was the Great Depression. And I'll bring up a chart and say, the Great Depression was pretty bad, right? But then the stock market recovered and it went back up. And then we had World War II and it went down. And then it went back up. And then we had the Korean War and it went down. And then it went back up. And over the last, 50, 60, 70, 100 years, it's always gone up. It's just had these little periods when bad things happen. And obviously, no aspersions against your grandpa, but he sold at the wrong time. And if he'd stayed in or if he'd bought more, he would have been okay. But people who don't understand it, they hear one bad thing and they go, oh, yeah, one of my friends lost money on a Bitcoin scam, so therefore Bitcoin is bad. Well, I've had friends who lost money on banking scams because people ring up and say, I'm so-and-so from your bank and there's a security problem, and they give their password and all their money's gone. Doesn't mean the bank is bad. So, yeah, it's people don't understand it. Like I said, my sister moved to America in 95, 96. She met an American guy in Australia, fell madly in love and went over there. And I couldn't afford, because back then phone calls actually cost money. I couldn't afford to call my sister every couple of days to catch up with her. So she went out and bought a fax machine. I went out and bought a fax machine. And I would literally handwrite a letter to my sister. And at midnight, when the call rates were cheap, I would press send and send her a fax. And she'd read it and she'd write me a letter and she'd press send and send a fax back. And that's how we communicated, because it cost $1 rather than $5 or $10 for a call. And then later that year, she said to me, there's this thing called the internet. You can plug a little phone in the back of your computer and I can send you messages on the internet. Again, no World Wide Web, no web pages. There was just like basically email and chat groups. And I said, no, that sounds wrong. Like, that's going to be really expensive. And she's like, no, it's basically free. You just pay like a couple of dollars to hook up, and you can send me a message instantly. And in my head, I'm going like, it can't be instant, because a fax takes a whole minute to pass through a page. It can't be that simple. It can't be that cheap. It must be wrong, But I trusted my sister and I persisted. And after a while, we'd be chatting away to each other on the internet for free in real time. It was amazing, absolutely amazing, new technology. And I'd go and tell people down the street and people in the shops, go, oh my God, there's this thing called the internet. I can chat to my sister in America for free. It's like so cool. And they're like, yeah, I've heard of the internet. That's where all the sex perverts and all the drug dealers hang out. And you shouldn't go on the internet. Your computer will get a virus and your computer will blow up, and people will send drugs to you in the mail, and all these things that they'd heard about the internet, but they weren't on the internet. They didn't know. And I just
so Jeremy, this sounds like it's almost history repeating.
Yeah, absolutely.
This is obviously where you're going with the story, isn't it?
I wasn't a drug dealer. My sister wasn't a sex pervert that I know about. And we were on the internet. You can use any technology, whether it's the internet, whether it's crypto, whether it's chainsaws. You can use it for good or you can use it for evil. And if you're only watching the bad news, you're just going to associate all the bad things with it. There's bad things with the stock market, with the internet, with crypto, with chainsaws, with guns.
So when we
there's also good things about them.
Definitely. When we look back to late 90s, early 20s, when the internet was starting to sort of come, you can email and things like that. Because I remember emailing my family, because I went to around Australia traveling around 2000. I was at the Sydney Olympics, which was amazing.
Oh, wow.
Yeah. And I had a bit of time up in Queensland, by the way, in Brisbane and all the rest of it. But when you look back from, it doesn't seem that long ago, when you live it, you look back and blimey, that doesn't seem long ago. And for most people, 20, 25 years sounds like a lifetime, and it is a long time, obviously. But where do you think, what's it going to be like when we look in 25 years' time, if we could, fast forward, time warp into some sort of time machine and jump 20 years ahead?
Yeah.
What are these videos? This will be on the internet forever. So what's it going to, when we look back and watch these old videos now, what we're gonna think? Are we just gonna be laughing our heads off thinking these guys literally had no idea what was coming?
I think there's a thing about unconscious incompetence. Like the first time you try and tie your shoes, it's really difficult. And now you can do it, after 3 beers while someone's talking to you. At the first time I went on the internet, I literally had to plug the computer into the phone socket, plug the computer into the wall. You have to click on this TCP/IP, and it does this handshake and the dial-up. And I was very conscious, I'm performing a task. I'm going on the internet. Whereas, if you're having a conversation with one of your mates down the pub and he says, who won the gold medal for swimming in the 2000 Olympics? You can't remember. You pick up your phone and you just type it in, bang, and you got the answer in your palm of your hand. But do you think, I'm going on the internet, I will research this? You don't, because you're always there. You're unconsciously on the internet all the time. And I think that's what we have with crypto. Like when I was first buying crypto, I had to go to a specific website. I had to make sure I had my ad blockers and my virus blockers on, and put in my credit card details, and absolutely panic while I was waiting 30 minutes for the crypto to transfer. And nowadays, even like it's a much smoother experience. You've got some great exchanges, which are simple. But I think, 20 years in the future, you won't even know that you're using crypto. You won't even, it'll just be a bing, bang, bang on your phone. When you're in a foreign country, when you're in Australia, you would have used like a Visa card to pay for stuff. And you weren't thinking, I've got to convert British pounds into Australian dollars, and then they've got to transfer from my account. You don't think about it. You just tap and go, So I think that's going to be the experience with the technology where you're not even aware that you're using it.
That's really interesting. Yeah. What's that, Will?
Yeah, I completely agree. I think that's and I think it's where it should go. As you said, when you're going abroad in a foreign country, or even just in your own country, when you're scanning like your debit card, you're not thinking about the Visa rails that it's using to kind of do those. And I think that's where crypto should be heading. And I think that's where the innovation will be really special, because it will mean that people like my parents, for example, who would never in a million years use it right now, that's when they can start seeing the benefits of this technology. And
do you think we'll still be using fiat currency?
Me? I think.
Or just everyone? I don't know.
Yeah, it's very speculative, isn't it? I think
in 20 years' time.
I know that countries are exploring kind of central bank digital currencies. I think
it'd be like when you collect stamps, mate.
Sorry?
Like when your grandma collects stamps, everyone's grandma's got a drawer full of stamps with little pretty, different colours and different.
My granddad used to collect stamps.
But like, just even a few years ago, it was literally tap and go with your Visa card. But now people tap with their phone, they tap with their watch. You go into a restaurant, you scan a QR code, you don't get given a menu anymore. So one of these days, it's just going to be tap, scan, tap, scan. And do we need physical cash? No, but there'll still be some people who have a little bucket at home and say, these are stamps, kid. This is what we used to use to send a letter. And people going, what's a letter? It's like an email, but real. And this is cash. Email? This is what we used to have before we tapped our phones and our watches. And people just look at you and go, Grandma, you're so stupid. Why would you want pieces of paper?
I think it will almost certainly go all digital. How it does that, I think, could be anybody's guess. How it fits into today's fiat currencies and how kind of governments roll it out, I think, is purely speculative. I'll be really interested in your point of view on that, Jeremy, to be honest with you. Yeah, because I don't know how it integrates with society as it goes into the mainstream more and more. That's, I think.
When's the last time you touched cash, Will?
Never. I don't anymore. I know for a fact that it's obviously going to go digital. It'd be interesting.
Yeah.
I guess what the big hot topic debate right now is how does that fit into the mainstream and how does that take over kind of traditional fiat currencies? What do you think?
Yeah. Even small markets, like the farmers markets. Most of them have got a little tap and go thing that they plug into their phone or whatever. So there's not cash at the little farmers markets. Obviously, the big shops haven't had cash for a long time. And the guy who washes my car, he's got a little tap and go thing in his pocket. And I just tap his pocket and off we go. I'll pay for that. The person who cuts my hair and the guy who cuts my lawn both take Bitcoin. All right?
Amazing.
Pay them in Bitcoin.
This is something that isn't really a thing in the UK, is you don't have many vendors taking cryptocurrencies. Is that something that's more common in Australia?
Well, it is within like a 5 square block radius of where I live.
Interesting.
Because ever since I started using Bitcoin transactions, I would actually I would go into the shops. They usually say, cash or card, right? That's their standard thing. When you're paying for something, they say cash or card. So I would take the initiative, and it was just a joke, right? It was always a joke. I just say to the hairdresser, do you want cash, card, or Bitcoin? And she'd laugh and go, I don't know what that is, right? And then the next month I get my hair cut, and I say, do you want cash, card, or Bitcoin? And she's like, oh, yeah, I've heard of Bitcoin. And then it was literally the 12th time that I asked her, because I get my hair cut every month. That's why it looks so, stunning. The 12th time I asked her, she went, I'd like to take Bitcoin, but I don't know how to. And I went, wow. Give me your phone. Tap, 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 tap. Set her up with a Bitcoin wallet. Within a couple of minutes, paid for my haircut, and off I went. And then, the next month I came back, cash, card, or Bitcoin. I just say that to everyone, right? It's just my standard thing. And because she was doing some renovations, she wanted the card. She was, dodging some tax. She wanted some cash. And I just keep saying it. And after a few more months, she'd say, "Oh, look, let's make it Bitcoin this time." And she opened up her little Bitcoin app on her phone and goes, "Oh, that's $60 that you paid me a few months ago. That's worth 110 now." I say, "Yep, that's how Bitcoin works." And she's like, "Oh my God, I'm going to start taking Bitcoin from everybody else." So the airport in Brisbane, the international airport.
I was just going to say, I love the way that you're helping introduce Bitcoin, to the masses and introducing it in a really nice, natural way. I think it's fantastic. It's helping drive adoption ultimately, isn't it?
Yeah, there's literally one guy in Brisbane who convinced the international airport to have every shop in the international airport. So whether they're selling T-shirts or drinks or sandwiches or whatever, they all take Bitcoin in the international airport. So someone stepping off a plane from China doesn't have to go over and change their currency and lose 1%. They can literally just walk up and pay for their sandwich and their T-shirt as soon as they get off the plane.
Jeremy,
the UK is nothing like that, is it, Will? The UK is nothing like that.
I know. Jeremy, can I ask, how do you picture the world? Do you picture a world where everybody in the future is going to be using Bitcoin or a currency like it? And how do you think it fits in?
Well, there's 60% of the countries in the world at the moment working on central bank digital currencies.
Exactly. So how does Bitcoin fit into this kind of picture of everything? How in your kind of vision?
Yeah, I think It'd be uncommon for you to go into the supermarket and pick up a couple of heads of broccoli and say, "Can I pay with this gold coin?" All right. The kid behind the checkout in the supermarket is going to say no, right? Because they don't understand. But if you went to a farmer's market and you said, "You know, I want to buy a couple of old records, can I pay with this gold coin?" If the guy's got half a brain, he's at least going to pull his phone out and Google, what's the value of that gold coin? How can I verify that it is in fact a gold coin and not just one that you painted yourself? You know? So, I mean, we used to do barter, we used to do trade back in the old days. It's like chickens for pigs and pigs for broccoli and that sort of stuff. So I think there'll be more people open to the idea of, you know, do you want cash? Do you want the central bank digital currency where the government can literally control your spending limits and they can literally trace that currency and, you know, down the track, potentially. I'm not trying to start Ben's conspiracy theory clock up again.
Please do.
But you know, we've had experiments in different countries and even in Australia where they have tried controlling people's expenditure and saying, okay, you know, this community has a problem with alcohol. We're going to issue you a currency or a form of debit card that can only be used for food. It can't be used for alcohol or drugs or whatever. In America, they had the food stamp system, you know, so you could only buy food with that sort of stuff. So that's going to be the fear with the central bank digital currency is they're going to track it, they're going to control it and say, okay, we've noticed you're packing on the pounds a little bit, mate, so we're going to stop you from buying chocolate this weekend. And you're like, what? It's my money. No, it's not your money, it's the government's money. And to escape that system, you'd want to have your own currency, some sort of cryptocurrency, Bitcoin, whatever.
So you envision a world where kind of the currency as we see it today, sort of in an idealistic way, you'd like that to become prevalent. People switch on to that and use it more.
Yeah, I mean, I actually support central bank digital currencies just from an economic point of view, because the governments have to print currency, right? £50 note doesn't cost more than a £5 note to make, but it still costs money to make it. And then someone's got to put it in a truck and they've got to have armed guards and they've got to transport it to the bank and then they've got to put it in the bank and then someone's got to count it. You know, when you spend it, someone's got to count it, someone's got to drive it to the bank. So it's a big investment to print the currency, and then when the currency gets damaged, they have to take it back and replace it. Whereas if they could just press a button, like what you do when you're paying Ben for drinks on Friday night, you can just transfer via PayPal or a bank transfer or whatever, costs nothing. But the actual physical money that is in the system and the trucks that drive the money around and the security guards, that all costs money. So having central bank digital currency where they can pay everyone at the push of a button means no more armor guard trucks, no more armed security guys. You know, it's going to save them a fortune. So economically, I think it's a good idea. And that's why the government will go for it, because it's going to save them an absolute fortune. The problem is when they start to get too greedy, and governments always want more control and more power, is when they're going to start saying, no, you've packed on a couple of pounds, no chocolate for you. Ben, you drink too much on Fridays, so we're going to make sure that you can't spend money at the local bottle shop on Fridays, only Mondays and Wednesdays between 3 and 5. That sort of stuff may happen, you know. And
well, this is the problem, isn't it?
Economically, it's a good idea for every country.
Yeah, definitely. But this ultimately is the problem, isn't it? If you give governments the power, the tools to control, there's a mission creep, isn't there? Like they do a little bit, and then and then a new government comes in.
Look what they've done in China.
Exactly. What's it like? So, tell us about the crypto scene in Australia. I get the sense that there's quite a high adoption rate.
High adoption rates again within 5 kilometers of where I live. I think Australians have been early adopters of the cashless society, early adopters of FPOS and that sort of stuff. I don't know. Maybe it's because we've got a little population spread over a vast distance. I'm not sure. Taking cash to grandma's house, probably not such a good idea. I'm not sure why it is, but I think we've adopted new technology fairly quickly. I think the adoption rate at the moment is probably less than 5% in Australia. So certainly not as high as countries like Turkey, Argentina, El Salvador, India, Nigeria, where they've had a lot of problems with inflation, hyperinflation. But it's a convenience, and also it's a bit of fun investing in something and seeing it go up and being able to buy meme coins. That's fun for some people as well.
Yeah, that's true actually, because there's definitely that sort of gambling element to it, isn't there? That, you know, with crypto, and the Aussies love their pokies, don't they? I remember their pokey machines in Australia. For anyone who doesn't know what,
kind of like gambling,
tell the audience. It's not the audience won't know what the hell I'm talking about. What's a pokey machine?
Well, it's like, I think you call it a card machine, or just like the one-armed bandit used to be. But yeah, put your money in there, and if you lose, you lose. Like you lost the whole lot. Whereas with crypto, you might buy Pepe coin or Dogecoin or something that's completely worthless, and it might go down by 90%, but you've still got a little bit of your money left. And then it might go up by 100%. And you go, hey, I've doubled my money. Well, no, you've only got 20% left of your original investment, but you can still tell people you doubled your money. But most times you don't lose everything. So it's kind of, it's one step above gambling if you're playing with the dodgy coins. But obviously, if you invest in the good things, they're around for a long time. It's like the stock market. You can invest in, no one had ever heard of Facebook back in the day, back in the early 2000s. So you could invest in rock solid companies that have been around for a long, long time. And you can also take a punt on a little thing that's basically just appeared. And I think that's why we diversify. When Solana first came out a few years ago, we looked at Solana and went, okay, this is a good project, good founders, good offering, sensible. It could potentially take a bit of business away from Ethereum, in the same way the iPhone took a little bit of business away from Nokia. But we weren't completely sure. Like when the iPhone came out, who was completely sure? So we put 1% of the portfolio into Solana when it was a few cents. And then basically 12 months later, it was still a few cents. It sat flat. And we're sort of looking and going, it hasn't done much. People don't know about it. But we looked again and went, it's still a good project. It's just they hadn't done much marketing. And then a few months later, Solana just rocketed up. I can't remember the exact figures, but we made over 13,000% within the next 4 months. And we go, finally people have actually caught on that this is a decent project, right? And when it was 1% of our portfolio, if it went broke, we didn't care because we can recover from that. But suddenly it's like 13 to 15% of our portfolio. If it went broke then, we lose a big chunk of money. So we sold down some, rebalanced, and that sort of stuff. But every now and then you can have these massive gains in crypto. We've done gains of more than 10,000% on 6 different projects. So it's not just a fluke. Everybody can have a fluke. But because we do the research, we do methodical research, we follow the 4-step protocol. And so we get lucky more often than most people. And also in 7 years, we've never had a coin go to zero. We've never had a scam. We've never had a rug pull.
I was going to ask what your process was for, because whilst you were talking earlier, I popped on the website and had a look. I really like the portfolio section where you can drag around the bubbles and see the percentages. And it was really cool. Really love it. And as you were talking, I was kind of thinking, I was like hoping I had the opportunity to ask down the line is how do you sort of approach what projects or what cryptocurrencies to add to that portfolio? You mentioned a 4-step plan, kind of really intrigued into that. I think that's kind of a common question, probably, if you were going to invest in a mutual fund. Yeah.
I mean, most mutual funds don't share their process. Most mutual funds don't share what they've invested in until you get the semi-annual report.
It's really interesting that you've done that as well.
Yeah, we just want to be fully transparent. And because, again, school teachers, we want to educate people and tell them the truth, because there's going to be some people who invest in a mutual fund because they're too busy, and that's fine. I'll get someone to wash my car and cut my lawn because I'm too busy. But in the olden days, I had time and I washed my own car and I cut my own lawn. And in the olden days, I'd do my own research into my own stocks and in my retirement fund. But then I got too busy and I just go, someone else can look after that now. So for the people who have got the time and want to do it, we'll teach them how we do it. for free because we want them to do it safely. The least we can do is help you avoid all the scams. And if you make a couple of 100% in a year, then that's great as well, you know. But the bare minimum is help people avoid the scams because, again, I've had 30 years in the stock market. I've seen so many banking scams and stock market scams and, you know, all sorts of things. And now the scams have moved on to crypto because crypto is the new thing. You used to get scammed on the phone. Now you get scammed on the internet. You know, it just follows the technology. But there's the red flags to look out for. That 4-step protocol that you're talking about, that's the website we set up before we started Boston. So back then I was thinking about crypto. Everyone wants to use crypto and become a millionaire. All right. So we took CRY, first 3 letters in crypto, and then the last bit of millionaire. So we called it Crillionaire. So register the website crillionaire.com, and that's where we put the 4-step protocol that you can follow through. But then every month we also update that still because we're doing research all the time. And, you know, there might be 10 new coins came out today. So we'll research into them. 8 of them are crap. 2 of them are good. 1 of them we decided to buy, and 1 of them we just didn't for whatever reason. So the good ones we'll actually put on the website and say, here's what we are buying or what we're thinking about buying. And people can read about why we actually look at those projects, and there's fundamentals and there's technology and there's the founders and the, you know, the details. It's basically a 1-pager summary of that, rather than buying Peppy coin or Dogecoin because one of my mates thought it was funny, you know. So we educate people because, you know, why not go and learn how to do it responsibly. And then if you want us to do it for you, obviously that's not free. We charge a small fee for looking after your money, but if you want to do it yourself, get all the information for nothing.
Awesome.
No, I really admire the perspective of it, really, actually, because I think there's probably a fundamental lack of trust in the crypto space because of all the scams happening. So to actually have people like yourselves being very transparent and just wanting to educate, I think is only going to do good, isn't it?
Absolutely. And Jeremy, how do you deal with the regulation side of things? Do you have to be sort of regulated in lots of different jurisdictions, or you know, because obviously regulation in the US is very tough. UK, I think it's very hard to get. I don't know if have they actually given any regulation. I think you can literally just apply to be a crypto company. I think that's pretty much it. How do you tell me about the regulation side of things?
I mean, obviously, crypto is still unregulated in most countries. There's a couple of little regulations in France and Hong Kong and Singapore at the moment that have literally just come in the last month or two. But when we first started, again, it was my sort of naivety looking at like crypto is like a little tiny stock market. And when people started saying, "Can you look after my money for me?" then we went, "Oh, look, we'll create a mutual fund." And there's been mutual funds, you know, for 50 years. There's been stock market for 400 years, but mutual funds only been around the last 50 years. So we thought, we'll design this thing based on the mutual funds. What does Vanguard do? What does BlackRock do? They take people's money, they charge them 2% per year, and they look after it. So that's what we did. And because I've been working with mutual funds for 30 years, I understood that. I just had to get on the inside rather than on the outside. But we set ours up complying with the regulations of the stock market and the mutual funds, because there was no regulations around crypto. And I thought, of course. Back in 2016, I thought, well, there's going to be some regulations, and it makes sense that they'll just copy and paste them from the stock market and from the mutual fund market. It makes sense that they would do that rather than starting again from scratch. So we'll comply with these regulations until they bring them in. And of course, you know, 5 or 6 years later, 7 years later, we're still waiting that we've been complying with regulations that don't exist. We've been complying with the mutual fund regulations. So we were the first crypto fund to list on Morningstar. Morningstar is where they aggregate all the mutual funds all around the world. That's where your accountant and your financial planner goes to look for a decent investment for you. So we actually got listed on there because we complied with all the mutual fund legislation. So there's a few of our competitors who started up after us. I think they're going to find it difficult to comply with the regulations when the regulations come in, because they're going to be playing catch up. Whereas we've been complying with what we thought the rules were all the way along. So when they finally come in, we'll just have to change them a little bit. But there's some guys out there who've been doing nothing, and yeah, they're going to have to do a lot of catch up.
Yeah, for sure. It's the I mean, even data protection is simple things like that, isn't it? It's holding customers' data and things. But yeah, I guess the whole regulatory industries, the regulatory sector within crypto is going to be a wave that's coming at some point, and it's just it's a question when. But it's funny, isn't it? Because there's no regulation, and yet like you get the SEC sort of going after Ripple, going after Binance, going after Coinbase, didn't they? But they almost do it by suing them, don't they? So they're sort of saying you're not complying to XYZ regulation, but they're saying, well, hang on a second, we've asked you what the rules are, but you're not telling us what the rules are. It's just
Coinbase was the crazy one, because Coinbase is a publicly listed company. They applied to the SEC and said, hey, we're going to have this business where we buy and sell crypto for people. And the SEC went, yeah, right,
crack on.
We'll list you.
Publicly listed company.
Yeah, have a go. And then a couple of years later, they're going, oh, no, you're running an unlicensed exchange. Like, well, we told you what we were going to be doing. You approved it. So, yeah, another reason why I don't like Gary, but that's okay.
It's really strange, isn't it? Because there's no regulation. So what are they holding them against? Because there's no rules. It's just well, actually, they're applying the old rules, aren't they? That's what he's trying to do. He's trying to apply the rules for security law in America.
And the court case came out, and they were saying, is Ripple or XRP, is XRP a security or is it not a security? And Gary Gensler said, well, it wasn't a security when it was sold to the institutions, but it was a security when it was sold to the investors. Like, what?
Yeah. And that's very. It's still disingenuous, really, isn't it? So do you tread more carefully with customers from America, or do you treat them exactly the same, or do you not have customers in America? Because
we're not racist, Ben. We'll deal with anyone. Obviously, we do our background checks to make sure that they're not terrorists or whatever.
The KYC stuff, yeah.
Yeah, I mean, we'd be happy to take all the money from the terrorists. We just wouldn't give it back to them. But yeah, we do the KYC. We do the things that a normal mutual fund would do, and we've always done those from the start. So that's why it's going to be easy for us to adapt to the new regime. But American investors, like, they have to say, I'm a sophisticated investor. They have to tell us that. And they might be, they might not. It's like when you go to one of those sites that Will goes to and says, I click to say I'm over the age of 18. I mean, he probably clicked on it once when he was 17, but we can't police against that, right? I'm talking about Reddit.
I'm sure Will would never do such a thing.
Never. I can't believe what Jeremy's accusing me of.
I don't know. What, tell me. I've got no idea.
Well, I think we all know.
It's Reddit or Twitter.
Put it in the comments.
They've got to say they're a sophisticated investor, and we also suggest, like, you don't put your life savings into crypto, because crypto is very volatile. You can make 200% in one day, you can lose 99% in one day. So we suggest, and most financial professionals suggest, 5 to 10% of your portfolio into crypto, and obviously, 90 to 95% should be in the traditional stocks, shares, bonds, property, blah, blah, blah. So that's what we tell them. There might be someone out there who says, yeah, this is only 10% of my portfolio, and they put in their life savings. We can't police that. But the best we can do is actually say, look, we tried. We tried to give them the good advice. It's up to them whether they take it or not.
Yeah, no, absolutely. So, what's the future? What's the trajectory for Boston?
Right, onwards and upwards. As I say, we started to help people. We didn't start the company because we needed it to make a lot of money. And it's funny, since we started, like, we charge 2% a year, right? Upfront, honest about that. there was like 3 years later, one of our competitors came out and said, "Oh, we're going to charge 2% a year plus 20% of whatever we make." And I looked at the guy and went, "That's a lot, right?" And he's like, "Well, if the fund's making 100%, people don't care about the 20% fee." And I went, "Yeah, dude has a point." And then the next year, another competitor came out and said, "Oh, because those guys are charging 20% and getting away with it, we're going to charge 30%. And I looked at the other bloke and went, "Oh, that's a lot." And he's like, "Well, the fund does well. People don't care." Okay, but we'll just start to charge 2%. And that's what we're going to do. Now, funnily enough, some of our competitors actually went bankrupt last year because they got involved in the dodgy FTX and this, 3 Arrows Capital went spectacularly bankrupt because they failed to run the fund like it was a mutual fund. 3 Arrows Capital had 43% invested with Sam Bankman-Fried. And like I was talking before about, taking a 1% risk here and a 1% risk there, they put nearly half their money with this 27-year-old dude who knew nothing about the markets. Like, hello. So we're just going to plod along, we've just not going to be shooting the lights out every year, not going to be sponsoring stadiums and things like that, but just look after
long-term investors is probably a good place, isn't it? Slowly but surely. Just out of interest, though, when you're dealing with your clients, obviously the last couple of years has been a really tough market. 22, 23. It feels like it's been tough 23, but obviously Bitcoin has actually done really well. As a percentage,
it's doubled this year.
Yeah. So, although it does, it sort of feels like it's just getting back to parity almost a little bit.
Yeah.
But how have you how have the investors sort of coped with that sort of fluctuation and that the last couple of years? Because again, they're coming from possibly, I'd imagine, I might be wrong, more of a, they're probably asking you, look, can you do it for me? Well, like your original ones, they didn't understand it in real, they didn't want to get in the weeds. Maybe they didn't have time or they weren't interested, but they wanted to take that opportunity and they want somebody else to help them with that sort of process. How have they, I guess, dealt with that volatility? How have you managed to deal with that volatility with managing them as well?
Yeah, again, like the traditional mutual funds will send out a report maybe every 6 months and say, this is how your fund's gone. We've been doing monthly updates since day one. So you can go onto the website and you can look, what were we doing in August 2018? What were we doing in January 2020 or whatever? So we're absolutely, we send out newsletter and say, this is what's going on in the world, macroeconomics. This is how that affects the stock market. And this is how that affects the crypto market. Because crypto is just a very small subsection of the investment market. So you need to know what's going on in the world, whether there's a war on, whether there's high interest rates, that sort of stuff. So we update people all the time. We're very open and honest. And, when the Boston coin went from like $100 a coin down to like $40, $50 a coin, we told people. But we also say from the start, very upfront, the suggested time frame for a mutual fund is usually 5 to 7 years, and you're going to have a couple of bad years in that time frame. You look at the stock market over 5 to 7 years, there's going to be one bad year, and then there's going to be a few good years to balance it out. So you just got to weather the storms and hang in there. And we've got some of our investors who have literally been with us since day one, like Steve, who was my financial planner mate, and the accountant and the lawyer. They've been in there for since day one, since 7 years.
Yeah, brilliant.
Some people have come and gone for other reasons. Whether they had divorce or health reasons, they needed to withdraw their investments early. And we don't lock them up. Like we say, the suggested time frame is 5 to 7 years. But if something happens and you need your money out next Tuesday, give us a call. It's not guaranteed that it's going to have major money if you've only been in there for a week.
Definitely. And with the Boston coin, you touched on the Boston coin. How does sounds as though, so you've got a coin as well. How does the coin fit in with the overall sort of business model? So
when you buy a stock or a share, you buy a stock or share in the bank. What you don't understand is that's a share of the business. You own one millionth of the bank. So you own 1/1,000,000th of their chair and their building and that sort of stuff. And when you buy a mutual fund, you might throw 10 grand in the mutual fund and they say, here's however many units. And you get a bit of paper saying how many units you've got. But we actually issue the token, the digital token, which we call the Boston coin. So when you've got one Boston coin, inside that is what Will was talking about, the portfolio with the little bubbles. Inside of each Boston coin is a little bit of the whatever we've got, a little bit of the Bitcoin, a little bit of the Ethereum, and Solana.
I'm with you. So can the people buy the Boston coin on the open market, or is it just for those who are investing into the mutual?
They can if they want to jump on to like SushiSwap, one of the decentralized exchanges. We're not on a centralized exchange as yet. We were listed as pending on Binance in 2017 and been pending ever since, because obviously with a normal stock that goes up and down, or a normal crypto that goes up and down very quickly, the exchanges make a lot of money because people buy, sell, buy, sell, buy, sell. Your traditional mutual funds only have a daily price. So no one's going to be buying and selling the traditional mutual funds. And so the exchanges don't make any money out of us, really. We are listed on Sushi, but otherwise, if you want the Barclays mutual fund or the Vanguard mutual fund, you have to go direct to the company. And then if you want your money back, you go direct to the company. So that's the way it's always been.
So when they come directly to you and they invest, i.e. 500 quid, they'll get a set number of Boston coins that represent that value. I'm with you.
Yeah.
So I'm just trying to understand the sort of, I guess, the tokenomics side of it. If the tokens are on the exchange and people can freely buy it, that can obviously affect the price of those tokens. But how does the share percentage ownership? Does that get affected in any way? Does that make sense?
Not really.
No,
we have a difference between we have a difference between the buy and sell. Because obviously prices will move. We don't want people to jump in at 9 o'clock in the morning and buy into the fund and then jump out at 5 o'clock in the afternoon. That's not investing. That's day trading. That's something different.
Okay. So basically, I'm just trying to understand the mechanics of it. I'm a much more visual person, so I find sort of concepts easier to see.
Just like a normal mutual fund, they'll have so many units. The difference is with a mutual fund, and I'm not sure which mutual funds you guys have over there, but you might be familiar with the BlackRock or the Vanguard. Like you put in your few hundred quid, and they'll say you've got 26 units. Now, when you go and have a beer next Tuesday, and you don't have enough money to pay Will, you can't transfer one of your units to him. You've just got the piece of paper. That's it. Whereas with the Boston coin, because it is actually a coin on the blockchain, I can transfer one Boston coin from my account to you. And this is the fun part, is like, when you come to us and you say, hey, I'm Ben, I want to put my life savings into Boston coin, we do the KYC. We'll want your passport or your driver's license or whatever. And let's say you buy 100 Boston coin, but then next Tuesday you send one to Will and you send one to your mum, you send one to someone else. We don't know how many you've got now. We don't know these other people. Yeah. So if Will comes to us and says, I want to withdraw my Boston coin, we're like, Will, we don't know who you are. He's got to actually have to prove who he is. And if Ben comes to us and says, I want to cash in my 100 Boston coin and take my money back, we're going to say, well, sure, transfer the 100 Boston coin. And if you've been giving them away to all your mates, then you don't have the ones to transfer back. So it's all open. It's all policed on the blockchain. It's all transparent.
Yeah. So ultimately, the way an investor would get you to invest their money would be ultimately just literally going and buying the Boston coin.
Yeah.
By you.
Yeah. I mean, you pay cash or USD for Boston coin. We use that to buy more of the investments that we want.
Yeah. And so if that person who has, I don't know, they buy 100 Boston coins, if they then sell I guess if they sell it on SushiSwap, for example, or they can sell it directly back to you, that's the reality.
Yeah.
Fine. But if they start transacting it to other people that you had no knowledge of, then that's just them effectively losing it effectively, because you don't know who XYZ is.
Yeah, I gave away a lot of Bitcoins before I realized that Bitcoins were a store of value. I was just using them transactionally. And when Facebook said you can't advertise crypto anymore, we would actually pay people, say, look, we'd put a post on Facebook, because we could still post about it, we just couldn't advertise. We'd put a post on Facebook and say, if you share this post on your wall, we'll give you $5 worth of Bitcoin. Back when Bitcoin was under $1,000. And a lot of people were sharing it, and we were giving away Bitcoin like there was no tomorrow.
Yeah.
We
definitely.
didn't know. Who knew it was going to be worth 20 times as much? Every time
I think I had it in my head,
it'd be $100.
Yeah, I think I had it in my head that people would write you a check, and then you would cash that check in, and then invest that money, into Bitcoin, Ethereum, whatever. So I now understand the mechanics.
Come on, Ben. Who do you know who has checks? We're all cashless. It's all bank transfer.
I'm sure I've got an old checkbook hidden away somewhere. I haven't used it for a long time.
We've got bank accounts in 61 different countries, and guess what? I haven't been into the 61 different countries. I haven't flown into 61 different countries. No, don't send me a check. Nobody send me a check, because I wouldn't even know where the bank is.
Probably bounce.
Yeah, I'll take a photo of the check and email it to the banker.
Yeah. Awesome. Brilliant. Well, Will, have you got any other sort of final questions? I think that was really
fascinating listening.
You didn't ask the big question.
What's the big question? Come on.
Why the hell did we call it Boston?
I think I know the answer to this. Haven't you got an office in Boston?
Oh, he's avoiding it there the whole time.
We have Boston Terriers, mate. Look at the logo. That's the puppy's face.
Yes. Excellent.
It doesn't help that I'm not a dog person, so I wouldn't have got it. That's very clever. Can I see the little guy again? There you go.
Oh. Of
She's
course.
been sleeping on my lap all morning.
I was going to say, I remember you saying on the email, you were saying that you're not going to be able to walk the dog on Tuesdays, Wednesdays for you.
Yeah.
So that's Boston.
This was the issue, Will, is, like there's marketing teams out there, there's creative types who come up with names and slogans and logos and things like that. But when you've got the accountant, the lawyer, the tax specialist, the financial planner sitting around the table, none of us could think of, we'll call it Kodak, or we'll call it Virgin Airlines, or we'll call it whatever. Like, we don't know what to call it, but there's a dog in the corner. We'll name it after the dog.
I think it looks really cool. I think the brand's quite fun looking, actually, to be fair. Like, the website looks really cool. It looks.
Yeah, the logo turned out really nice.
Yeah, I think it's worked out.
How old is Boston?
This is Princess Polly. She's just turned 4, but we did have another Boston Terrier before these two, who was around for 13 years. So it's Boston Terrier family.
I'm with you.
Yeah. So one of our funds is actually, we've got 3 funds now. We started with the Boston coin, which was the fully diversified, with Bitcoin and a few other things, as well as owning the exchange and the fiber optic cables. And then, the first 4 years, that one did like about 360%, 400% a year for the first 4 years. And then some people came to us and went, that's nice. What else have you got? Have you got something that's more high risk, that's more, and like, well, we could. And there was my own personal portfolio, because my risk level is way up, because I've been in the markets a long time. I understand it. And the normal person's risk level is sort of way down. That's why we started with the balance fund. And then when people came to us and went, look, have you got anything that's super high risk? There are people, who 22-year-olds who are like, YOLO. And so we had my portfolio, which branched out into another fund that we started, which we named after the dog. They've got a dog called D'Artagnan. So we named the Dart portfolio. And there was no Bitcoin, no stable coins, nothing safe in that. It was just like all super high risk. Yeah. And the first 9 months, it did 11,000%. And then it crashed, right? And it crashed down by half. And I was going, oh my God, I'm looking at this. And like this is the 10th month or 11th month. I'm going to have to do the annual report because we've been doing the monthly reports. And I'm looking at it going, oh my God, this is like really bad. And my business partner came in and said, like, what are you freaking out about? And I said, I've got to have to do the report for the Dart Fund, and it's gone down by half. And she's looking at the chart going, but you made 5,000% for the year. And I said, yes, but what you don't understand is that it was 11,000, now it's only 5. And she's like, you made 5,000% for the year. People will be happy with that. Right? But people will, no, just... We don't advertise that one. We don't want people to know about that, because if you tell people you can make 1,000% in a year or more, they go, oh no, that can't be real. It must be a scam. Right. Yeah. But because the other people had been in the Boston Coin Fund for a few years and they'd seen it doing 200, 300, 400%, they're kind of used to it. And they read the newsletters every month and they watch the Bitcoin price on TV. They're actually used to it. They understand and they will believe it because that's how it works. But yeah, we don't advertise the other ones. We've got 3 funds, but we only advertise the main one because that's toe in the water. For the average person, it's going to make them happy most of the time.
Yeah, for sure. And are you starting to sort of gear up, or well, are you gearing up for the anticipated halving next year? Are you sort of strategizing sort of the way you're going to do things, or is there anything sort of planned, or are you just looking forward to a more positive next 18 months, 2 years?
Well, gear up. I'm hoping for you guys, gear up just means get ready.
That's what it means. That's what it means in my world.
Hedge fund circles, hedge fund circles, gearing up means like negative gearing, like you're borrowing to invest.
Yeah.
We don't do
that either. I was thinking of something else.
Don't borrow to invest in crypto. But certainly, before the halving, traditionally, Bitcoin's only been around 15 years. So it's not like you've got 400 years of stock market experience to call on. But in the last 15 years, every time there's been a halving event, the Bitcoin price has more than doubled. Sometimes it's gone up 600%. Sometimes it's gone up 800%. One time it was 13,000%, but that was back in the day when no one knew about it. So yeah, we're very confident that next year is going to be a good year. We're hoping that Gary gets the flick because it's an election year in the US, and politicians are people, as Will says. So it makes sense for them to approve cryptocurrency regulation. It makes sense for them to approve the Bitcoin ETFs because that keeps the money in America, keeps the innovation in America rather than moving overseas. So we feel confident those things will be approved. And if you want to have some fun, look at the gold price chart over the last 30 years, and you can circle the spot where they launched the gold ETF in 2004, because the price was pretty well flat for about 20 years. And then just as soon as they launched the ETF, it just took off and has never come back. So when they launch the Bitcoin ETF, we believe the price is going to go up because traditional institutions will be able to invest in Bitcoin for the first time. The regulations will come in. And of course, the halving is encoded. Whether the politicians want it or not, the halving is going to happen, even if the other things don't happen. So yeah, looking forward to a very big next year and getting ready now, getting as many investors in as we can, because we want them to get in before it doubles, not after it doubles. I mean, I got in before Bitcoin went from $1,000 to $20,000. Most other people got in afterwards. So.
Yeah, I was just having a quick look and see if I could find a little diagram showing that price spike with the gold. But we'll have to maybe look at that some other time, because I think that'd be quite interesting. Yeah, I think there's that anticipation, isn't there? There's that anticipation. I think this is going to be a wave of money coming in, isn't there? When this regulation comes in and these ETFs get launched, it's just there's a tidal wave. I think that's building. I can sense it. Well, we know it's happening.
I mean, even as I said before, like the first mutual fund was 1971. So the elite rich people have been investing in stock markets since the 1600s. And then, Jack Bogle came out in 1971 and went, I think that normal people would like to invest in the stock market, but they can't build a big portfolio unless they've got $1 million. So I'm going to start with $1 million and then allow people to buy little shares in this thing. And all the stockbrokers, all the people who own stocks and shares and things like that's a stupid idea. That's never going to work. And of course, the first year he bought in about $5,000, and the next year he bought in about $50,000, and then third year he bought in a couple of million, and now we've got the stage where the mutual fund managers are the biggest businesses in the entire world. BlackRock's worth $9-10 trillion, and all these other ones are household names. People thought it wouldn't work, but all of a sudden here we are, and the stock market has been more stable and more accessible for the last 50 years than it has for the previous 300. Yeah. So when the crypto regulations come in, it's going to be better for everybody.
Phenomenal. On that note, I'm sure, Jeremy, you've got dogs to be walking.
Almost time for their breakfast, mate.
Yeah, definitely. No, Jeremy, listen, I really appreciate you coming on. I really enjoyed that. It was really interesting to sort of learn about you and your sort of backstory. And really looking forward to having you on the show on a regular basis. So thanks so much for sharing your story. I think it was brilliant. And Will, thanks again, mate. Really appreciate you joining me.
To be fair, I haven't contributed a lot this episode, but I've really enjoyed listening to you, Jeremy. I think your story is fascinating, and hopefully we get to chat a bit more on these shows.
Definitely.
You're just a quiet one, Will.
Oh, well, I've been giving you the stage like normally. You can't shut me up. No, I found you very interesting to listen to. Thank you so much.
I look forward to you doing all the talking next week.
We'll have to try and get some controversy next week because that was quite fun. But if you get a chance, Jerry, watch yesterday's show. It was quite. There was a big Twitter spat as well. All kicked off with. Actually, your Aussie mate, who reckons he's Satoshi Nakamoto, Craig Wright.
Don't get me started now. That'll be next time.
That's another story. Another hour. So, that was all good. It was all good. But, Kurt Carney came on the show, and he was a great guest. I always like to give everyone, I'm always open-minded and happy to listen to everyone's perspective. Go from there. But listen, quick wrap up. If anyone is still watching the show, or when it's after it's been pre-recorded later, thanks so much. Tune in again every day, Monday to Friday, 7:30 UTC time. That's 8:30 UK time, and 5:30 in Australia, Queensland. Awesome, guys. Take care.
Thank you.